So here we are on natural gas and moving lower again. We've now convincingly broken through the support at around $2.20. Actually, I've moved that line down just a little bit to $2.16 because the base actually began to form slightly below $2.20. So now we know where that level is more accurately at $2.16 and not $2.20. Not that it makes a big deal of difference, but it's always nice to be accurate. We've moved down back towards this $2 level, and I've actually neatened up this chart just for you to make it look rather pretty. My charts are sometimes a bit Van Gogh, I suppose, or Van Gogh, but I've just neatened it up to make it easier to follow. So we continue to get lower lows and lower highs on natural gas, and today we have just continued with yesterday's move below that $2.16 level. You know my positions. I'm long $2.10, short $2.95. I have not adjusted this hedge still yet. It doesn't matter in which direction this chart moves because my profit is now fixed at a certain level. Having said that, we're now starting to move into the potential buying zone. And the potential buying zone is somewhere between $2 and $1.80 initially. And if we break down below $1.80, the next buying zone will be around $1.50. Once again, if you don't know where I get these levels from, please look at previous videos to find out why. I've also drawn these lines in green now instead of red, which I had them in sort of red or purple before, because that just reminds me that we're now starting to look for opportunities to buy. So we've got our first support zone that we're moving into right now between just above $2 and about $1.97. And then the next level below us is $1.80. And if I just zoom out, you can see there's the $1.50 level. I've drawn them in green, as I said, to remind me that these are areas where we're now starting to look to buy. However, we're looking for specific signals before we trigger long positions. I've also drawn a trend line in here, which is now beautifully formed and wasn't as obvious before. So we've got a downward sloping trend line, which we're holding beautifully to. We've got lower lows and lower highs on the daily candles, and we're moving into support. What we want to see is evidence of reversal. As I said in the previous video, that evidence could be any number of things. We could look for a break and a hold above this trend line. We could look for a break and a hold and a back test of the various support levels or resistance levels, and then a move up from there. We could look at MACDs, moving average crossovers, stochastics. We could look at RSI, whatever indicators you're looking at. I've said to you in my previous video that I prefer to look for candlestick reversal patterns because we're trading a commodity which comes out of the ground and the sea. It's based on digging things up, human emotion, and candlestick charts basically draw a picture of human sentiment and emotion and feelings about the market. And that's what we want to be trading whenever we're trading commodities. So I'm looking for candlestick reversal patterns, and those could be bullish engulfing candles, there could be spike lows, they could be abandoned baby, they could be morning star patterns, they could be one up, one down, any number of candle patterns. If you don't understand candle patterns or if you need to know more about it, I've got some videos on this channel about candlestick patterns, and I'll link one or two of those videos at the end of this video so you can go and click on those and go and read up about it, or just go and read a book or Google it on Investopedia or one of those websites. But I'm looking for a candlestick reversal pattern at or around the levels that I've got on the chart, and that would be $2.16, $1.95, or into this zone here around about $2, and failing that $1.80, and failing that $1.50. So any of those levels, I'm really looking for a reaction off them in terms of a reversal pattern, and then I want to see a hold above those levels before I start to initiate long positions in natural gas. Because I'm hedged, all I'll be doing is adjusting my hedge to the long side. I'm not going to be adjusting to the short side. I'm looking for long positions on natural gas. You've got the levels where we are right now, just above $2, down to $1.95. That's this green zone here. And then $1.80 below that. Okay, I've got a 179, and then $1.50 below that. So I'm looking for very specific triggers. Now, you may not like to trade with candlesticks. You might be looking for other indicators like, as I said, technical indicators on your chart, or trend line break, or just simple horizontal support and resistance line break, whatever. I'm looking for candle patterns in conjunction with breaks and holds above support and resistance lines. I prefer horizontal lines to angled trend lines. Generally, they're much more clear and accurate and more important than angled trend lines. But trend lines also play their role. So that's my overall strategy. I'm going to be adjusting this hedged position in favor of the long side when I see evidence that we may have changed direction, and I'll be doing it gradually and carefully with a great deal of risk aversion, because natural gas can be as volatile on the charts as it is in real life for its purpose. My target ultimately, this pink zone here, kept this pink because I like pink, and it's also different to these levels. So I've drawn the support and resistance levels in green because we're now starting to look for long positions. And I've drawn my target up here in pink, $3, 40, 50, 60, 70, somewhere in that region. And who knows, as I said, we may even get higher up into the $5 region. I don't think so, but you never know. This is natural gas, and it can be very surprising sometimes, as we all know. Well, I hope you found that useful. And if you've got any comments, please leave them in the comments below, and I'll try and answer as many as I can. And if you found this content helpful, please press the like button and also consider subscribing to the channel. And I'll see you in the next video.